Okay guys, welcome. If you're new to the channel, we cover stock market technical analysis and trade ideas. Really, it's all about trading, finding trade ideas, trade setups. I try to point out what I'm seeing in the market. I'm going to try to make this a quick video, keep it around 10 minutes, but I am going to point out some key levels to watch and some trade ideas. So stay tuned, follow along, leave me a thumbs up along the way if you guys find value. Okay, triple Qs, we're starting out here. We're looking at an hourly chart here. So triple Qs, again, is just tech. Basically, it's just FANG stocks for the most part. And we've got on the hourly chart a small little downtrend line. I've got it marked out right here that we basically have been building, but we also have bullish divergence here on the hourly. So you'll see right there, there's your bullish divergence on the RSI and the PPO. So that indicates that we're probably going to get a bounce here. And we've had a pretty good sizable move to the downside, almost 10%, I believe, from the highs, from the all-time highs. Yeah, it was about 8.5%. But it does look like we're set up for a bounce. And on this downtrend line right here, we are slightly popping above it. So you want to see this impulsively break to the upside. Otherwise, it could fail right here and we could make another leg lower. So watch that level. Right now, I have it sitting at about 359.20. We're slightly above it right now. If we do break to the upside, we've got a little bit of resistance right in here, 362.33 and 360.60. And a break above that, I think we're heading up to this the bigger downtrend line, which is kind of the major downtrend that we've started over the last couple weeks. And that's all the way up here at about 368.50. Depends on when we get there. That's the objective area, I think, to reshort the market. If we're going to get all the way up there, I think you want to look to enter a short position right there with the stops, slightly above. Okay, so again, I am looking to short. We are in a downtrend, a short-term downtrend at least. We have started to make lower highs and lower lows. We just recently made a lower low above that previous low right there on the daily chart. So we're in a downtrend, all right? And I think we're heading at least down to 342.50, but we could bounce here first and then continue to roll over. So those are all the things I'm watching. Right now on the SPY, the SPY's holding this support zone right in here. And it really comes down to this trend line I have marked in red. Again, that's from your weekly chart. That goes back to the entire bull market of from the 2009 Great Recession lows. And on the weekly chart, you can see I have all the areas when we hit that trend line, establishing support. And we broke in 2018. It was resistance. The Fed was able to pump us all the way back up above the trend line. And that's where we've been at really all of 2021, just about. We've been just treading water above this trend line. And as I come in, that's where we're at right now, still above the trend line. So until that breaks on the weekly chart, I don't think you're going to get any kind of major move to the downside until this goes. So things to look for. I still see a little more downside on the Qs, but again, I don't see this this 2021 trend really breaking until we get a break of this trend line here. Tesla. So this is a short trade idea. Again, we're at major resistance, which is sitting there at about 780. That's kind of comes back from your former support zone back here in early 2021. We finally broke it. It's been resistance ever since. So there's resistance. We broke. Came back up to it. We've been popping above it for about a week and a half or so now, but nothing impulsive. They just kind of pop above it, run some stops, and sell back down. Pop above it, run some stops. So this is the area of liquidity, right? So if you're a major hedge fund or a market maker and you want to take a short position, you want to take it when you're running stops, when people are exiting their positions and you're shorting. So they pop it above a key resistance level. Short sellers start to exit their shorts, cover their shorts, and they take those positions without moving the price too much. So that allows them to take large positions without moving the price. And then when you start to get the price, move it to the downside. If we're going to get that, they're profitable. So that's what it looks like to me. Until we definitively break above this level, I think that we're going to hold those resistance and we should start to head lower down to this trend line marked in blue. Right there, that's your next level of kind of major support. And a break of that, we're likely going to go much lower. So we'll watch for that. The blue trend line right now today is sitting at about 714, 720. It would depend on when we got down there. It could be 730, somewhere right there. So we'll just watch that, but you can mark it on your daily chart. The low there is from May 19th, 2021, and we just connect all the dots. Moving on. Starbucks at support here. So Starbucks hit support today at 109.53. You can see that's kind of the former area of support right through here, and there's another tag of it. Here they stopped short, and today we hit it perfect. So I did cover my Starbucks short position. Again, just to point out that trade, and I'll reshort this thing if we break this level. But if we don't break it, I'm gonna just stay out of the short position. You could go long here. I mean, that is support. I think we're likely going lower and gonna break. I'm gonna look for more downside, but maybe there's a little bounce here. The short was entered all the way back here. There's your island cluster top reversal pattern. And, basically we also have a head and shoulders pattern, and this is basically the neckline. So a break of the neckline should bring us down. But here was the short trade idea. I entered it on this day right up here in July 26th, but, several people probably waited till about July 28th, which was the gap down. And that was the short trade. And, if you took it there down to where we're at, it's a 10.5% gain. So yeah, covering the trade here. Maybe there's a bounce, maybe not. I'll reshort it on a break of that trendline support. Cover car. I'm still short this thing. We're just kind of treading water right here. Pretty much at resistance. Very similar to Tesla. We're not really breaking out above this trend line. I think we're going to get rejected, but this is likely just some, running some stops and stuff. Again, shorted it right there on September 28th. So we're underwater a little bit on the trade. We're down by about 7% on the trade. Again, it's all about position sizing, right? I don't load the boat on any one trade. And so again, this one, and I did talk about how this one is pretty volatile. So, half size position or something would make sense on a super volatile equity. You don't need to take smaller position sizes the more volatile a position is, because again, they can run stops and kind of push it against you a little bit, and you want to be able to stay in the trade. If it's going to work, you don't want to get stopped out because you're too heavy in a trade and you emotionally just can't take the losses, or financially can't take the losses. So again, I'm still in it, still looking for a breakdown or a rejection right in here. We'll see. Again, we still have negative divergence on this one as I look here at the PPO. Still there. We're making new higher highs in price, still lower on the PPO and the RSI. So I'm looking for this to start to turn down here pretty soon, and I'm looking for that rejection here. Probably going to come in the form of a gap down. That's what I'm looking for. If that doesn't show up and we could just continue to move higher, I'll probably look to stop out of the trade. Let's go to gold. Gold continues to hold up. I am looking for a rally in gold, and really the next leg higher, probably putting us over the all-time highs. And looking for that to just continue. I don't expect it to just blow, spike straight up. I do think it's going to build over time on this next leg higher, and probably get more impulsive as time goes on, as more and more people realize that gold's continuing its bull market run. Right now we're holding above the key level, 1755 right there. Nothing crazy. It's not that important of a level. I think a more important level is up here. 1832. So likely we're heading up there, and I want to see a break of that. A break of that, I do believe likely will set us up for a move to the all-time highs. But that's a key level to watch. You can see that's been resistance for quite some time now. Here, we got 3 tags of that. So we want to see that go as a impulsive indication that gold's going higher. But so far we're still holding support. And as we roll down to the miners, you can see the miners still holding this bearish rising wedge pattern. So bullish falling wedge pattern. So here's your wedge. It's a bullish falling wedge. These patterns indicate that when you get to the apex of the wedge, the probability says it's going to break to the upside. The miners have been beaten up pretty bad, but again, you can see we're just still holding that pattern, kind of moving higher. So again, if you want to wait, then you would want to wait for a break of the pattern like that, some sort of a bullish candle breakout. It's likely going to be pretty impulsive when it shows up. So by the time that shows up, they might try to run it back and take it back down to knock you off the trade. But a couple ways to handle this is you can buy at support or on the breakout. So the support's down here. It's this trend line. So down there, I've got it kind of circled. These are support, tags of support. That's an area to potentially buy, or you can wait for the breakout. Gold has bullish divergence right there. The GDX does. You can see how the momentum has been trending higher ever so slightly while the prices continue to drift lower. So bullish divergence, bullish falling wedge, bullish pattern. No, no breakouts yet. So that breakout will be the proof, I guess, for what these patterns are telling us it's going to do here in the near future. And let's look at the VXX. This is the VIX ETF. Again, it's a short ETF. The VIX hasn't really broken out. We've seen a correction in the tech stocks. We didn't really see it in the value stocks or the S&P 500 as much. It was really mostly confined to tech and the FANG stocks. I think, if you're going to get any more selling in the tech stocks, you're likely going to see that flow over to the broad-based market, and we're going to get a spike in the VIX. So things to watch for here. The VIX has just been, it really kind of looks like it's creating a bull flag where you've got kind of the initial spike. We're kind of flagging out, and that would set us up for a continuation up to about 3104 on the VXX. How do I feel about it right now? I think we're going to get that breakout. I kind of pointed out those levels to watch on triple Qs. That I'm really using that as my guide because I do believe that that's going to be the leading indicator. Triple Qs will be the leading indicator of where the SPY is going to go. So if we see another breakdown in the Qs, SPY will likely break, and then we're going to see that spike. So I'm kind of holding off on going long this VXX until I start to see some more weakness in the triple Qs. But that's these are levels to watch. So we got some resistance 30.99. We've got another level at 48.66. Another level all the way up here at 64.93. Those are probably the kind of the key relevant levels that we would look for. Obviously, we could go higher, but yeah, those are the levels I'll be watching. And then if we don't, if we continue to just grind higher, then this thing's going to just continue to drift lower. So things to look for on that one. We do have bullish divergence, though. Look at the big bullish divergence that's been building on the VIX, this VXX, for quite some time now. So it's indicating that this downward price action is about to reverse. When this thing reverses, it reverses very violently, and it's not a kind of a slow grind higher. It's big impulsive moves very quickly. So sometimes you got to get ahead of it if you see it coming. Might make sense to sprinkle on a little bit here in anticipation of that move. I definitely wouldn't go too heavy on any one of that. And again, everything in this channel is just my opinion. It's not financial advice. It's just me looking at charts and seeing what I see. So that's all I got, guys. Give me a thumbs up. Check out the stock market technical analysis course. Link in the description below. And I will catch you guys later. Bye.